Good afternoon. This is our second chapter and next topic. Second chapter, theory base of accounting, and next topic is system of accounting. System of accounting means system of recording transactions in the books of accounts. So system of accounting are generally classified into two types. First is double entry system and second is single entry system. We are using double entry system in accounts. Okay, this is the main system. So what is double entry system? We have studied dual aspect concept, and double entry system is based on dual aspect. Double entry system is based on the principle of dual aspect, which states that every transaction has two effects: receiving of a benefit and giving of a benefit. Each transaction involves two or more accounts and is recorded at different places in the ledger. Every single transaction has two effects and therefore it is recorded in two accounts because it has two conditions. One is receiving of a benefit and second is giving of a benefit, or we can say goods and services. Means if the transaction is of purchase, then in purchasing a good, one party is purchasing and the second party is selling its goods. Okay, in this way every transaction has two effects: one is giving and second is receiving, and therefore it should be recorded in two different accounts at different places. Double entry system is a complete system. It is also known as complete system of accounting because both the aspects of a transaction are recorded in the books of accounts. So the recording of a transaction is complete in this system because a transaction has two effects, receiving and giving, and both the effects are recorded in books of accounts. So this system can be implemented by big as well as small organizations. In big business houses or in small organizations, they use double entry system of accounting. A single entry system of accounting is not complete system of accounting. It is also known as incomplete system of accounting because in maintaining records of financial transactions in this system, only personal accounts and cash book or cash account is maintained and not the other accounts. Only these accounts, personal accounts and cash account or cash book, is maintained in single entry system. Therefore it is known as incomplete record. Now comes to the next topic, accounting standards. There are some accounting standards which are given by ICAI. It's the Institute of Chartered Accountants of India. By ICAI, some accounting standards are written. These are the written policy documents covering the aspects of recognition, measurement, treatment, presentation and disclosure of accounting transaction in financial statements. How to record a transaction and what are the relevant informations disclosed by the accountant for any transaction, all these, and what are the measurement theories and what are the treatment of concepts and principles, how the accounts are to be presented or written. Now all these are given by accounting standards, giving under accounting standards, and these accounting standards are given by ICAI, Institute of Chartered Accountants of India, and all the recording of transactions and maintaining account books is depend on these accounting standards. How to express fixed assets, goodwill and other liabilities and incomes, expenditures, all these are prescribed by accounting standards. So these are the page number 37 of NCERT book part 1 financial accounting. In this book on page number 37 the table is given of accounting standards, and just like accounting standard 1, it is for presentation of financial statement. Accounting standard 2, inventories. Inventories means stock of goods. Accounting standard 7, cash flow statement. Cash flow statement means this statement shows the cash inflow and outflow, means how much cash is received or paid during the year of an enterprise. Indian accounting standard 8, INDAS means Indian accounting standard. Accounting policies, changes in accounting estimates and errors. What are the policies and changing in accounting estimations or changing in accounting policies, these all are given in accounting standard 8. Now 10th, events after the balance sheet date. What are the events which are come under knowledge after the balance sheet date, after the last date of financial year? Then 11th is construction contracts, about contracts related with constructions. 12th is income tax, and these are the other accounting standards given in on this page 37 and page number 38. You all have to read thoroughly these two pages. Now come to the next topic, goods and service tax, GST. One country, it means one country, one tax. Only one tax is given by the levied by the government. So GST is a destination based tax. Destination based tax means it is based on place, on consumption of goods and services. Where these goods and services are purchased or sold or consumed, this tax is based on this, means destination. It is proposed to be levied at all stages, right from the manufacture up to the final consumption, with credit of tax paid at previous stages. GST is levied at all stages, right from the manufacture, from where the goods are manufactured up to the final hands of consumption. This tax is levied by the government. So GST has a dual aspect with the center and state. Central government and state government, this has dual aspect of central and state simultaneously levying on a common tax base. There are three main components of GST. Three main components of GST, which are CGST, SGST, IGST. These are the three main components of GST. GST is goods and service tax. So first we will study first point, CGST. CGST means Central Goods and Services Tax. Central Goods and Services Tax. So it starts from central word, means central government. All tax collected under CGST will constitute the revenue of the central government. It constitutes the revenues of central government. Whatever the taxes is received through CGST, all these taxes goes in the hands of central government. The present central taxes are just like central excise duty, additional excise duty, special excise duty, central sales tax, etc. will be subsumed under CGST. All these taxes are covered under CGST. Next is SGST. SGST means State Goods and Services Tax. Goods and services which are purchased, sold or consumed in any state. So when state levied taxes on the services, then it is collected. Collection of CGST is the revenue of the state government. With GST, all state taxes like VAT, entertainment tax, luxury tax, entry tax, all the taxes which are levied or imposed by the state government, all are merged with GST. Now, only CGST is charged, and all these taxes, other taxes, are merged with GST. And the collection of SGST is contribute the revenue of state government. And last is IGST. IGST means integrated goods and services tax. Integrated means in which central and state both are involved. Revenue collected under IGST is divided between central and state government as per the rate of tax specified by the government. Whatever the rates are specified by the government for central and for state government, this tax is divided on that basis only. IGST is charged on transfer of goods and services from one state to another. Because it is integrated goods and service tax, it means two states or central or state government is involved in these transactions. Import of goods and services are also covered under IGST. Import of goods and services from one state to another is also covered under IGST, means integrated goods and service tax. Now come to the characteristics of goods and service tax. What are the main characteristics? GST is a common law and procedure throughout the country under single administration. Yes, it is termed as one country one tax. So GST is a common law and procedure throughout the country. It is same. GST is a destination based tax and levied at a single point at the time of consumption of goods and services by the end consumer. Next, GST is a comprehensive levy and collection on both goods and services at the same rate with benefit of input tax credit or subtraction of value. GST is a comprehensive levy and collection on both goods and services. It is levied on both goods and services. Minimum number of rates of taxes does not exceed 2. Minimum number of rates of taxes means percentage of tax does not exceed 2. There is no scope for levy of cess, resale tax, additional tax, turnover tax, etc. All these taxes are covered under GST. There is no multiple levy of tax on goods and services. Only one tax is levied by the government, that is GST. And all the other taxes will be merged in this tax. So this is this chapter is over here. So you all read thoroughly from the book, and I am also sending notes in PDF form. You all must note these. You all should note these notes in your copies, and please prepare big registers for accounting, for accounts copy. Okay.